Hi friends, I am King and you are watching my YouTube channel King Forex. How are you friends? Hope you all will be fine, having a good time and a good day and a good night. I'm also fine. Today I'm present with another fresh video of our series in which we will study about the role of inflation, deflation and reflation and forex trading. So as you people know that we have started a complete playlist and we have already uploaded some video and some part of this series. So if anyone is new here or haven't watched these videos up to yet, so he can watch it on our YouTube channel. So let's get to the point. Today video is about the role of inflation, reflation and deflation, that what is inflation, reflation, deflation, and what are the role of these three in forex trading. So inflation and its inverse deflation are fundamental forces in currency trading. Central banks are always concerned about managing inflation so it doesn't turn too high into hyperinflation nor too low and into a deflation. It's interesting to note that at first blush the fear of deflation seems unreasonable. Isn't lower price a good thing? To a consumer it would seem so, but to an economy it means there is less growth. Therefore fear of deflation is a major concern. For central bank, monetary policy is a balancing act. Containing inflation in the Western world has in many ways been achieved. In the period of 1973 through 1987, inflation levels in industrialized countries were near the 7.5% range. A decade later, in 1989, inflation levels ranged at the much lower where inflation growth in much lower level of 3%. Today, a reversal of expectations has occurred in the world of trading where inflation growth, partly due to the financial collapse of 2008, is low. Central banks around the world monitor inflation and raise interest rates to try to slow down inflation. Central banks often include in their statements accompanying accompanying interest rate decisions that they will be vigilant over potential risks of inflation. This is this is commonly known as being an inflation bank, an inflation hawk. Whenever inflation is feared to be lingering in the economy, traders interrupt. This fear is raising the probability that interest rate will increase. The expectation of inflation increasing tends to generate in the market the anticipation of higher rates and therefore works to support the buying of a currency that has good sources for locating interest rates and inflation are www.global-rates.com/economic indicator inflation inflation.aspx, and the second was www.usinflation-calculator.com/inflation/current-inflation-rates. Also, why strong retail prices tend to undermine bond prices. Bondholders fear increased rates because they reduce the attractiveness of the bonds they hold, in the market lowers the prices of the bonds in order to equalize the yield of the old bonds with the new interest rate. Inflation is the ever-present yet stealthy ghost that spokes the forex market and challenges central banks. It is particularly difficult to track and even perhaps more difficult to contain once the forces that lead to it, that is monetary stimulus, low interest rates, are released. There is ongoing controversy even among the best economists as how to measure and detect inflation, and as a result there are many data sets relating to inflation. Central banks all over the world are trying to get an accurate answer to the question of what is true core inflation. This level of complexity in measuring inflation sets up the forex markets for surprises when data come along that inflation has not been contained if central banks can't be accurate. in measuring inflation. Why should an individual trader surprises can be expected? When governments release inflation data, the difference between expected and actual number moves the market, speaking to the challenges in interrupting monthly inflation numbers during his tenure on the Federal Reserve Board. Former Vice Chairman Alan Blinder said the name of the game then was distinguishing the signal from the noise, which was often difficult. The key question on my mind was typically what part of each month's observation on inflation is durable and what part is fleeting. The challenge of getting a true measure of inflation has also been a focus of activity in Great Britain. The Office of National Statistics is introducing a new inflation calculator that allows persons to calculate their own inflation measure. In other words, the other measures such as the retail price index (RPI) and the retail price index excluding mortgage payments (RPIX) and the Harmonized Index of Consumer Prices (HICP) are still in force, but there is a recognition that inflation needs more measures of an accurate assessment. This confusion and debate over how to detect inflation in Great Britain underscores that the issue is an international one. The Monetary Policy Committee of the Bank of England offers more detail on this subject. The good news is that the forex trader doesn't have to become a PhD in economics to follow inflation data. Many key measures of inflation are tracked. Checking central bank websites provides direct inflation data. So that's all about inflation. I think that's enough for today. I'm done here and wanna short leave, so I'm closing here. If you have any question or any queries, you can ask in the comment section. Now I am going to take a rest, so take care. See you in next video. Tata, goodbye.